in Zimbabwe that deep dives into everything markets, finance, and equities. I'm Eben Mabunda. Let's get started. Now, coming up, Zimbabwe's gross domestic product grew by 6.5% in 2022 to 12.4 trillion Zimbabwe dollars before factoring in inflation. Now, after factoring in inflation, the figure comes to 225 billion Zimbabwe dollars. This is according to the latest stats issued by the country's statistics agency, Zimstat. Wholesale and retail trade contributed 18.7% to GDP to top the list, trailed by mining at 13%. Agriculture, manufacturing and finance contributed 12%, 11% and 8% respectively. Now, question is, with wholesale and retail leading the pack, is Zimbabwe now officially a supermarket economy? We discuss this on Beat the Market. We will be right back. Don't go anywhere. You are watching Beat the Market, the only show in Zimbabwe that deep dives into everything equities, markets, and finance. I'm Eben Mabunda. Now, to discuss the latest GDP stats issued by the country's official statistics agency, Zimstat, I'm joined by Zikomborero Sibanda as well as Dr. Prosper Chitambara, who are, of course, economists in Zimbabwe. Gentlemen, hello and welcome to Beat the Market.
Thank you, Eben.
Hello, thank you.
Fantastic. To get the ball rolling, Zikomborero, the 2022 GDP was estimated at 12.4 trillion Zimbabwean dollars at current prices. In other words, before factoring in inflation. When you then factor in the inflation, the GDP stats came in at 225.99 billion Zimbabwean dollars. What do you make of these particular figures?
Thank you, Eben. These particular figures are just showing us that the economy has grown last year, but despite the situation that we are facing, increased price and currency volatility. So to me, this growth to the ordinary citizens, it doesn't make sense, because ordinary citizens were actually suffered the most from last year, since the local currency lost more than 80% of its value. So here we're just discussing, seeing this figure, I'm just seeing actually focusing on businesses alone rather than also considering the human face component.
Right. Dr. Chitambara, what do you make of these particular figures as released, given, of course, the background of the inflationary pressures that the country suffered from, as well as also the element of the currency instability that continues to dog Zimbabwe into 2023?
Yeah, no, so that instability really weighed down, I think, on growth. I think we slew, actually, there was a slowdown, rather, last 2022 from 2021 on account of the weight of those macroeconomic challenges. And when you convert that into USD for global comparison, we are thinking about 21 billion US dollars, which is not much. And when you then begin to dissect that growth in terms of drivers, you realize that our economy has undergone some structural changes, with non-traditional sectors now predominating in terms of contribution to GDP, like your wholesale and retail trade sector, moving away from manufacturing, agriculture, more towards buying and selling.
Now, of course, we will get into the teensy-weensys of the structural changes, as you carefully indicate. Zikomborero, a growth of 6.5%, as we're quoted by Zimstat, vis-a-vis a target of growing the economy by more than 5%, as enunciated, of course, in the economic blueprint set forth by the government, the NDS1. What's your assessment of that particular movement there?
When it comes to the issue growth against the NDS1 targets, I think we are a bit off mark if we are starting from 2021. Also considering that these statistics being given by Zimstat actually far higher than actually other statistics provided by even the Treasury itself, as well as the World Bank, as well as IMF. So to me, This growth rate is coming from the fact that we witnessed increased global prices of minerals, so actually benefited from that front. Since Zimbabwe is actually the structure for economy, we are more dependent on primary commodities, so that's why maybe we get a high growth rate from that front. Agriculture as well, we're coming, it improved coming from, actually not improved, but it was a decline in agriculture considering the 2021 bumper harvest, which we then came into 2020. It was 2022, it was actually a slight decline, but improvements were seen in terms of maybe wheat production as well as maize. So to me, I think the growth to me is actually not that meaningful.
Right. Dr. Prosper, of course, this he made reference to the fact that when you then look at other aggregates, you then realize that this figure is almost double some of the stats that we have actually seen being relayed in as far as the performance of the Zimbabwean economy in 2022, perhaps to cite how it is that you've got the AFDB's 3% estimation as well as that of the World Bank, which came in at 3.4%. What is your assessment and why the disparity that we are seeing in this particular case?
I think disparity has always been there. It's by given that the models that are used obviously by some of these multilateral institutions, they differ from the model that obviously the Zimstat uses. For Zimstat also being on the ground, I tend to lean more towards their figures. They tend to be probably more accurate in terms of giving us a picture of what's actually happening within the broader economic space in Zimbabwe. And in any case, the estimations by the World Bank and the AFDB, they use figures, raw data that they actually get from either Ministry of Finance or even Zimstat itself. So I think for me, the official Zimstat figures are probably more accurate, given that they are on the ground and they reflect probably more the economic activities happening in Zimbabwe than the estimations by the other institutions, multilateral institutions.
And also relevant, of course, to the conversation when we still discuss the element of the aggregation of these particular figures. You've got the income means of coming up with the GDP, as well as also the expenditure aspect of also looking at it. Would you want to touch a little bit on that?
I think ultimately they give us the same answer, so to speak. So there are different methods of coming up, calculating the GDP. But eventually you actually come up with the same figure. If you look at the income way of measuring GDP, you're looking at the key income sources, for example, wages and salaries, profits by companies. And then in terms of the expenditure side, you're also looking at whether you're spending money on, say, capital or gross capital formation, or even consumption. So those are the two main aggregates in terms of that. Then of course the net trade figures, and in our case we actually had a deficit in terms of our trade balance. So it means we actually imported more than we exported.
Right. Zikomborero, the Zimstat report, of course, states that the retail and wholesale sector is the leading contributor to GDP, contributing over 18% to our aggregate GDP. What's the significance of this when you look at the overall economy?
Thank you, Eben. To me, this is actually showing the challenges which we are facing as Zimbabwe. That if you look, if retail, wholesale and retail trading is actually taking, it means that to me, it means more people who are supposed to be working in industries there actually not there. So to me, seeing that retail, wholesale and retail are actually the top performers, maybe attributing that maybe because we have to consider maybe COVID-19, that 2020, 2021, we're still having too much restrictions. Then 2022, we have actually, our government loosened the restrictions so that there was a movement of people, factors of production, But given that there's no employment, most of our people actually into buying and selling. So it shows that Zimbabwe is actually shifted from manufacturing actually to just buying and selling, which to me shows that the economy is actually susceptible to macroeconomic volatility, including external forces.
Right, multiple shocks, of course, as we witnessed, especially in 2022, some of which have been carried getting to where we are now. Dr. Chitambara, you look at how the retail sector, or the wholesale as well as the retail, is contributing 18% and of course leading the pack, and then you also look at how it is that you've got the manufacturing at 11%, mining at 13%. That disparity, that structural form of these particular sectors, what does this speak in terms of the economy? And do we at this point then warrant the position or the notion that says that Zimbabwe is a supermarket economy?
Yeah, of course, some observers would argue that, but I think it's not ultimately sustainable. I think we need to probably be focusing and trying to incentivize sectors that add value, like the manufacturing sector and even agricultural sector. We want those sectors to be contributing the greater chunk in terms of value added, in terms of our gross domestic product, because those are the sectors that are critical in terms of underpinning broad-based and sustained and sustainable growth and development. They create more sustainable jobs. Of course, they add value to our economy. But I think it's understandable given some of the structural challenges that we've had that have resulted in deindustrialization for the greater part of the last decades. The economy has undergone a lot of deindustrialization. Of course, now we're trying to rebuild the manufacturing sector. There are still challenges. And of course, manufacturing again is also intricately linked to the fortunes of the agricultural sector. So we then need to address those critical sectors in a more comprehensive and holistic approach. Because once agriculture, for example, does well, manufacturing also responds positively. And agricultural sector is also, again, been affected by a lot of climate-induced shocks. So I think there's need to, that has affected, obviously, productivity in agriculture, yields in general, and is also affected ultimately, not just the manufacturing sector, but the rest of the other sectors. Because once agriculture sneezes, it means the rest of the economy actually catches a cold. So I would put more emphasis towards trying to enhance productivity in agriculture, the issue of irrigation, so at least we climate-proof our, not just our agricultural sector, but our whole economy, in an effort to try to correct this structural error that we are actually seeing, where buying and selling is actually now dominating our economy.
And of course, still in that bracket, perhaps as follow-up, does this then indicate and show to us the informalization that we actually have in the economy? And question then would be, would this then, given the stats that we have, indicate a move toward formalization in the near future?
Yeah, it actually speaks to informalization. And in fact, figures from Zimstat have also revealed that the rate of informalization has actually increased from about 75.6% informal employment in 2018 to the current 90%. So that's very, very unsustainable. Of course, I know government has come up with a formalization strategy to try to see how best to incorporate the informal into the mainstream economy. But it's a challenge, because ultimately it's also linked to the broader macroeconomic factors. As long as those are not conducive enough to incentivize voluntary formalization, of course, also including the tax regime and other usual hard factors and even soft factors in terms of doing business. Ultimately, they also affect whether or not someone would want to formalize their businesses. Ultimately, it's about reducing the cost of compliance and the regulatory procedures associated with that.
Well, time to take a breather. When we come back, we explore the mining as well as agricultural sectors. Bid the market to be right back. Don't go anywhere.
my sister. She needs me. She's still out there.
I followed your friend from work yesterday.
You did what?
Have you ever seen a dead body?
What?
Kay had to put it in the trunk.
Kari, you don't know who these people are.
It feels organized, too connected. It's like a syndicate. There's no evidence, no body, nothing.
Farai, you need to pick your fights wisely.
Stop! Get on the ground now!
But you can't tell anyone because Kay will probably come for you.
Welcome back. You're watching Beat the Market. We're coming to you live from Zimbabwe's capital, Harare. I'm Eben Mabunda. Now, of course, we are discussing the latest GDP stats that have been issued by the country's official statistics agency, that, of course, being Zimstat. And according to the stats, Zimbabwe's GDP grew by 6.5% in 2022. I'm joined by economist Dr. Prosper Chitambara as well as Zikomborero Sibanda. Now, gentlemen, picking up from where we left off, the mining sector came in at 13% in as far as its contribution to the GDP, and was responsible, of course, for over 70% of Zimbabwe's export earnings in 2022. How important is this, Dr. Chitambara, in terms of the advancement of the Zimbabwean economy?
I think mining is important, obviously, also given its role in terms of contributing to foreign currency generation in the economy. But of course, the problem with mining is that it's not a sector that I would call proper in the sense that it doesn't necessarily employ a lot of people. It's highly capital intensive. And also, as a country, we've not fully moved up the value chain in terms of enhancing our refining capacity, for example, our processing capacity, I think, which is a key challenge that we then need to grapple with. But of course, mining has also been affected by other factors, like, for example, the leakages. There's been a lot of leakages, governance factors, if you want, challenges in terms of transparency and accountability, in terms of the mining rents. I think there are some of the issues that would then need to be addressed in order to probably fully maximize the potential of the sector. But the pricing has been very favorable, and for the foreseeable future, we project commodity prices to continue on an upward trajectory, so that should benefit our country quite immensely. But given our willingness and ability to address some of the challenges within the mining sector, if we're able to address those, I think mining, we are poised even to hit the target. Maybe not this year, but probably in the next few years.
The $12 billion mining industry target, which initially had been set for 2023. Zikomborero, to give just a breakdown or maybe to quote a statement from that particular report, the industry, particularly the mining, is largely driven by the mining of metal ores, which accounted for 78.1% of the mining value added. These include gold, platinum group metals, nickel, lithium, among several others. Now, the question is, given, of course, the 12 billion mining industry target that had been set by the government, and, of course, this particular breakdown, what's your assessment of this particular matrix against the backdrop of the target?
Thank you, Eben. The government is targeting a 12 billion mining sector economy by end of this year, which, of course, looking at statistics, is something which is a missed target already. Why? Because it's not because there's no activity there, but it's to me, maybe our mining sector could be at 12 billion by now if we are to factor in illicit financial flows, such as gold smuggling. Statistics from the government itself shows that Zimbabwe is losing about $100 million US per month to gold smuggling alone. And if you look on the Auditor General's reports around issues of diamonds, etc., there's also issues around transparency issues, just like Dr. Chitambare indicated. So to me, the mining sector is a backbone of our economy, but we are facing so many challenges, including even the mining regime in terms of the current legislation, which is, to me, is very archaic, because the Mines and Minerals Act is something, an act which was put during the colonial period, 1961. So to me, those issues need to be actually corrected. And if you look, currently government is there's the ongoing issue around that legislation, the amendment bill. But you are seeing that since 2019, it's something which is dragging. So to me, why is it so? Because mining is very, very key, and you see, even vested interests are there, including political interference in terms of awarding of mineral mining rights, claims, etc. So mining sector is a backbone to our economy, but we have to control the vested interests as well as illicit financial flows in the sector.
Right, to move on to another sector, which of course would be the agriculture, having contributed 11% to Zimbabwe's GDP in 2022. How important is that, and what prospects for growth exist where this particular sector is concerned?
I think agriculture obviously is also very key, given its linkages with manufacturing and with the rest of the economy. We have a lot of challenges in agriculture, owing largely to our vulnerabilities to climate-induced shocks. So I think with agriculture, once we're able to invest, of course, government has been doing investments in dam construction, for example, but we need also to make sure that our irrigation investments are upped, because currently the estimations are that probably only about 15% of potentially irrigable land is under irrigation, which is not very good. So we need to up that maybe to at least 30%, 40%. I think that would then help to ensure greater sustainability, not just of the agricultural sector, but of the rest of the economy. But over the past year, we have seen some notable improvements in certain subsectors, like the crop production. Wheat has done very well, and maize, there's also been an improvement. Tobacco obviously has always been doing very well, but I think we need to ensure that at least the other subsectors within agriculture also do well. And of course, enhancing again our capacity to process our agricultural commodities, agro-industry, also becomes very, very critical.
Zukomborero, closely linked is, of course, the element of manufacturing, of course, in this economy, which is pretty much in the same region, 11-12%. What can be done to improve the manufacturing sector, which of course closed the year at about 66%, now opening at about 63%, according to a report which indicated the performance of this particular sector within the first quarter of 2023. That's of course in as far as industry capacity utilization is actually concerned. What can be done to change this matrix and improve its contribution to Zimbabwe's overall economy?
Thank you, Eben. When it comes to manufacturing, I think as well as in any other sector, the first port of call is issues of macroeconomic stability. Here I'm talking about our local currency as well as the Zimbabwean prices. So to me, if you look what has been happening in terms of currency depreciation, it actually affects business predictability. How do you plan with the currency which loses? For instance, in June this year, our local currency has lost more than 60% in June alone. We're talking about 1 month. And how do you plan if you're an executive, you're having a company, you are running a company, but you're facing such increased exchange rate losses? So to me, we need actually the central bank as well as the Ministry of Finance to rein in on that, issues of fiscal discipline as well as monetary discipline. Then issues around cost of borrowing needs to be addressed here in Zimbabwe, because compared to the region, I think our cost of borrowing is too high, and this is actually affecting. That's why you see we're always bombarded by foreign produced goods, because our cost of production is high in terms of issues, even to do with electricity availability, the cost of fuel as well. Fuel is another key commodity which is needed in manufacturing, but our fuel prices are, compared to the region, they're always high. In terms of electricity availability, we're also being affected, facing prolonged load shedding schedules. So issues they need to be addressed, those structural rigidities. So once we do that, I think also we have to do issues to do with taxation. I think Zimbabwe, the treasury is taxing too much. Our taxes are too much and they are regressive in nature. And this is also adds burden on producers. So it needs to be, taxes need to be addressed, as well as providing some incentivize producers to make sure that they produce more.
Dr. Chitambara, according to Zimstat, the finance sector contributed 8% to Zimbabwe's GDP. Can you speak to us with regards to the importance of that particular figure against the backdrop of the overall performance of Zimbabwe?
Well, the finance sector that's the lifeblood of any economy. And in our case, I think our finance sector is tended to be very resilient. We've seen that over the past few years and has contributed to some extent. Of course, there are challenges that Rico has also highlighted with respect, for example, to the high cost of financing, which ultimately also then affects the financial sector itself. But I would say the finance sector has generally been very resilient. We've not experienced any major financial shocks like a collapse of a bank in a long time. So that speaks, I think, also to stability and the soundness of the sector in general, in spite of the macroeconomic challenges that the economy has been experiencing.
Briefly, just 1 minute, Komborero. Can you tell us about your expectations in terms of the GDP growth in 2023 for Zimbabwe?
For this year, it's tricky. It's tricky even. Considering that, let's use the first half already. In the first half, our local currency is down 80%. Issues of load shedding, they've actually impacted on industrial production. So to me, also considering also the risk which we are facing, the election risk, with elections, there's so many disruptions which may come. But also considering the positive side that we are seeing improved electricity production, as well as some the local currency is beginning to maybe to find its ground. We don't know the sustainability of that, but for in the outlook for me, I think we are going to witness a positive growth in terms of why, because mining, are seeing global commodity prices remains high and they're on demand. In Zimbabwe, we are one of the top producers, especially in Africa, in terms of minerals such as lithium, which are on global demand. So also agriculture, I think in terms of what is government doing in terms of helping small-scale farmers, I think it's also contributing positively, as well as ongoing construction projects. They also add to national output. So I think we are going to witness a positive growth, though mild.
Dr. Chitambara, as we wrap up, what can be done to bring about macroeconomic stability as we get, of course, into the second half of the year?
So I think it's about staying the course in terms of implementing the right reforms, whether it's monetary reforms. So we've seen the tightening of the monetary policy. We also need, obviously, to control our public spending. There's been a lot of pressure on public spending, which has affected stability. Then, of course, institutional reforms, closing off leakages, either in parastatals or even external leakages. So it's really a combination of those three key policies that are critical in terms of enhancing confidence in the local economy, the local currency.
Doctor, we are out of time. Gentlemen, thank you for joining us on Beat the Market. Well, do follow us, of course, on our social media handles at Zim Papers as well as at ZTN Prime. I'm Iben Mabunda, the money man. Let them do what they do. When we do what we do, we mean business. Danke and have a great day.